Markets are currently re-evaluating the geopolitical risk for the Eurozone in the wake of last week's crash of a Malaysian jetliner in the Ukraine, making Euro-US dollar a pair to watch. Cara Ordway of City Index is on the line now for this forecast interview. Cara, how much is the ongoing investigation into this event present in your 1 month forecast for this cross?
Geopolitical concerns have definitely taken precedent over the past couple of days. Those participating in any carry trades have found it hard to hold on to their positions as those risk currencies have sold off, and obviously traders have bought into those safe havens of yen and USD. But really, with the volatility that we've seen in the FX markets of late, there's been no real follow-through in terms of those euro positionings. It did push through that 135 level, which has been the psychological level that many traders have been eyeing for some time now. But really, unsurprisingly, it couldn't be sustained, and we saw it push up to that 135.30 level trading during this Asian session. So very much volatility maintaining any moves that we've seen due to those geopolitical concerns.
Not much movement as we head into the midterm with a 3-month forecast of 134. Why is that?
As I said, we're staying at this 135 level. We're also looking at a break of multi-year upward trend line. So really, traders looking at that technical support level of the 134.77, which is the 2014 low. The last time we broke this 135 level convincingly was way back in November when the ECB announced a rate cut. And even then we only sold down to the 133 mark, and it didn't last long at all. It pushed straight back up to the 135. So euro dollar has been really very, very stubborn. That's really why I'm not looking for that much movement over the next 3 months. Partly because of US yields, they've been very volatile, and really that's created some strength for the Eurozone, and also because that Eurozone has still a very big current account surplus, and that's really why we haven't seen that much weakness in that Euro cross. I guess once we see that asset quality review come and go, maybe there'll be some more inclination for sellers to come and sell some of that euro once that pressure from repatriation of funds subsides. But at the moment, as I said, it remains very stubborn, even against something like the pound, which has been very strong, and we've seen a lot of buyers. The euro has actually remained bid over the past couple of sessions.
But overall, you're seeing losses for the single currency down to 131 in a 1-year time frame. What events and data do you see conspiring against the euro?
I guess ultimately I'm looking at the fact that the Eurozone probably has a deflation problem on their hands. They've also got growth issues, and ultimately we should see the ECB announce some sort of further easing from them. This combined with the fact that we should hear from the Fed in terms of bringing their easing to conclusion within the next 6 to 12 months. US yields should start to improve, they should start to stabilise, and really that US dollar should become more attractive to traders, and therefore we should really see a realignment in that euro cross and push it down to those levels around that 131 mark. So really, I guess once again, as it has been in the past, it's really very much a focus on the central banks and when it's going to be in terms of when they move in terms of easing from the ECB, or really further tapering or interest rate hikes from the Fed.
Cara, thank you. To see if Cara's forecasts come into fruition, then stay tuned to Dukascopy TV. For now, it's goodbye.